Good afternoon and welcome to our LinkedIn Live today. I'm delighted to have Sean Corbett here, who is Director of Mortgages at SYS Mortgages with me today. Sean, how are you?
Good. And you?
I'm good, I'm good. And I know that you have a webinar coming up this evening. So I thought we'd just go live and just have a little chat so people could, get a few insights from you before the webinar, but also to get to know you, Sean. Tell us a little bit about yourself.
Yeah. Look, I've been doing mortgages forever. Well over 30 years now in the industry. So I guess I started my trade in the UK, doing mortgages there with a lot more lenders than we have in Ireland, only because of the population. So it's a real education, and being there through the good and the bad times in mortgages. I have seen interest rates up to 15.4% and paid them personally, and then started in the mortgage market in Ireland after 2010. So, but continued my specialty rather than financial services, even though I was a qualified financial advisor, an independent financial advisor originally in the UK. Fell in love with mortgages, and helping people to get on the property ladder and start their dreams, really. Because the one different thing between financial services, i.e. planning a pension, and planning a mortgage is, if you want a nice house and you don't want to be renting it, you have to borrow money. So, and that's what I've helped people on get on that journey for the last 30 years, and enjoy it. I enjoy the people I work with in the lenders and the people I work with as part of my team. So look, that's a little bit of insight to me. I've had a mortgage
Really?
all my life, but I've cleared it recently. And for anybody taking out a mortgage, it's great when you get a mortgage. It's even better when you pay it off.
Absolutely. But for people watching today, like I know that there are a lot of things going on, but you're on the front line, okay? You're seeing everything that's happening at the moment, and you're talking to people, you're talking to customers, you're talking to other people as well, partners. So what are you seeing at the moment?
Look, we're still seeing. There's been a big uplift in people looking for mortgage approvals. That's been constantly sort of growing now for the last 2 years on the back of interest rates coming down. Because fortunately, we went through a little bit of a glitch there about 24, 36 months ago, where interest rates actually started to creep up,
Hmm.
due to the Eurozone and the European Central Bank putting up rates. Thankfully, over the last 18 months, they've brought those rates steadily back down, and money is readily available. So we are seeing a trend in people going for mortgage approvals, probably record levels, in fact. Um, the old problem is still out there, though. Properties. And a couple of things with properties, really, that and I won't give too much away on from what I'm going to be talking about tonight, but um, the one is the lack of properties, and two is the way house prices have continued to increase, and they've continued to increase even after the all-time highs of 2008, which a lot of listeners won't have been familiar with. However, house prices were at an all-time high. We're back up to where they were. Um, but don't get too head up on house prices, I always say to people, because when you take out your first mortgage, or a mortgage, your house will go up in value and it will come down in value over a period of time, whether it's 25 or 35 years. So but what I'm really seeing out there is people are still keen to buy. Is anything going for the asking price? I don't see it. Everything seems to be going over and above the asking price. So don't panic if you see that happening. That's just what is happening out there at the moment. And because money is relatively good value now compared to renting, people are keen to get on the property market.
So you're seeing that a lot of people that are renting are just like, okay, I've had enough of this. I want to actually. Do you feel that that's still really important here in Ireland?
It is. It is really important. People do want to own their, and there is a big culture in Ireland of people wanting to own their own piece of property.
Mm.
What I don't see as much as maybe in other European countries is the reluctance for people to buy apartments. We're still not on that. on that journey yet. There are more and more apartments going up, and because of prices dictate now what people can afford, there are more apartments being sold in the likes of Dublin, but still people prefer a house, and that's what I'm still seeing. It seems to be the culture in Ireland that everyone wants a house rather than an apartment. But people certainly want to get off the rental trap, to just, not only because people call it dead money. There's no such thing as dead money. You've got a roof over your head, whether you're paying rent or whether you're paying a mortgage, and you'll pay for the privilege of having that. The two problems you have with renting is the way rental costs have gone, and it's not yours. I.e., 3 months before Christmas, you might receive a letter or an email saying you need to vacate the property because I'm selling it. Uh,
Mm.
you can't paint it pink if you want to. You probably need to get permission, and so on. You can't get a pet in some rentals. You can if it's your own home. So people want that independence. Yeah. So it's yeah, I'm seeing that a lot.
And what is the difference? I know for me, like I don't have a mortgage, for example. I rent, but what is it that a broker like you would do for someone that wanted to go and apply for a mortgage?
Well, it's assess their current situation. That's the most important thing that I'm seeing now when people are looking at getting mortgage approval. Is, are you ready?
Hmm.
And that's a very important thing, because we have got more lenders now in Ireland, thankfully, and more on the way. Fingers crossed, with the likes of Revolut coming, and to give yourself the best opportunity and to get the best mortgage to suit your needs, whether that's flexibility, whether it's the best rate in the market, or whether it's a cashback deal, for example. Um, the important thing is being as ready as you can to present yourself properly to that lender. And the great news is, Samantha, that lenders only look back over 6 months. So
Mm.
so for instance, where are we now? We're in February today. If somebody came to me today and had a chat with me, and I can tell somebody in 20 minutes if they're good to go or not. But if somebody came to me now in February and they weren't ready, and they needed to do a good bit of work to get themselves ready, they're ready to apply in August of this year. So there isn't a lot of. We all know how quick 6 months goes. It's so that's the difference. Yeah, it's making sure you speak to somebody such as ourselves, who doesn't charge fees, but will steer you in the right direction, and will actually tell you honestly, are you ready to apply now? And if you are ready to apply now, what is the best option to suit your needs? It's not always the best rate. You might want a cashback deal to put furniture in the property when you move in there. So it's weighing up all the options and then going for the best lender to suit your needs. Because that's why we've got 8 lenders currently. It's not one lender doesn't fit all.
Yeah, so I mean, so the advantages of going through a broker like yourself, or similar to yourself even, is that you're getting the proper guidance, that you know your stuff as well. You're in
Yeah,
the industry 20 years. Is that what you said? So I mean,
yeah, 30
you
plus,
30.
plus and counting. Not
Oh,
getting out of it anytime soon.
you must have been only 10 when you joined. So yeah, so it is really important to have that knowledge, expert knowledge. And what is one thing that you see that people are falling down on? So let's say they do have a chat with you, and is it response time when you actually have got news for them, or like do people have to respond really fast? What are the things that people fall down on when they're dealing with a broker?
Well, the biggest things, expectations sometimes, but it's become more reality now. People now are fairly educated on how much they can borrow, i.e., the four
Mm.
times salary rules and things. So that's not catching people out so much anymore. Um, Deposits, people are fairly educated about, but there are other helps there through the government. So again, we talk people through that. The biggest thing I'm seeing is, believe it or not, is repayment capacity, which again I'm talking about later on today and giving people tips on that. But it's something you're doing today that you're not going to have to do when you turn the key in your property. What I mean by that is, most lenders, i.e., if your mortgage is €1,000 per month, they want to see something you've been doing at €1,000 per month over the last 6 months to prove you're a good bet.
Ah,
Um,
okay. Yeah.
you might have been saving €1,000 per month
Mm.
over the last 6 months. So you don't have to save when you turn the key in your property. You've achieved your goal, and that boxes off repayment capacity. You might be paying rent of €1,000 per month, so it's
Or
it,
more.
yeah, and it's how people can demonstrate that, because I speak to people on a daily basis who tell me, yeah, I say, look, you're going to have repayment capacity. We're looking at the bank. They'll expect you to be saving €1,000. Are you saving it? Yes, I am. And this is the way the story goes. And then I get the statements in. When we get statements in of people to prove that they are doing what they said they're doing, 'cause the banks will want to see it. The banks
Mm.
are fairly forensic when it comes to going through your paperwork. Um, and then I say, yes, somebody is saving €1,000 a month, but then they went off to Greece in the summer and spent 3K on a holiday in Greece, and that came out of the €3,000 or out of the €1,000 per month savings. So what a bank does is your 3,000 you used on your holiday in Greece, they take that off your savings. So then somebody's only been saving 500 a month. Now, a
Okay.
one-off expense, your car blew up. You had to replace your car. They'll add that back into your savings. But it's finding an expert who can add back in what's allowed, or tell you
Mhm.
you need to not go to Greece next summer and you need to be saving €1,000 per month. So it's that's our job. Look,
Yeah, well, I mean, that's really helpful, I'd say. And I'd say, I know that I was talking to one person who dealt with you, and she said it was just so nice to have someone that she could bounce things off, that she was able to, she was unsure about something. And I know you told her about all of the grants and stuff that were available. And I think she applied for one of those and got it. And, so if anyone is thinking of buying their first home, there's a webinar this evening. Do you want to tell us about that?
Yeah, we're doing a series of webinars throughout the year. The one this evening is aimed at first time buyers. So people trying to get on the property ladder for the first time. However, first time buyers as well, the definition has changed for the better. If somebody's been in a sticky relationship before, they've been in a property with somebody and that relationship is broken down, potentially they can be now classed as a first time buyer again. So it depends. So there are other definitions of first time buyers now, but this webinar this evening is looking at first time buyers who are looking at getting on the property ladder, and via using a mortgage and what's all entailed in that. And we cover off all weird and wonderful things, such as there's hidden costs associated with a mortgage. Now, they're not hidden, but they're things people don't realize are payable before you can actually turn the key in your door.
Mm.
It goes through the criteria from the very basic criteria of what do you need to consider when you're taking out a mortgage, i.e. the term of the mortgage, whether it's fixed or variable, and the rules around how much you can borrow, and indeed what we spoke about there a minute ago, repayment capacity, and then the backup documents that are required to actually take out a mortgage, and some examples there as well of monthly payments. So look, and for the first time, we're going to do something really interesting. We're going to give people an insight into what's really happening out there in the housing market at the moment, i.e. availability, where we think house prices are going, and what renting market is doing, and so on. So we keep a very close eye on this, and we don't always share it with people, but I think it'll be really useful information now to see them to actually look, this is welcome to Ireland 2026, and this is what the housing market is looking like for 2026.
This is what I love about SYS Financial, though, and SYS Mortgages. You're always giving value. You're always adding value. You're educating people. I love that. I have a question. If you got divorced, would you be a first-time buyer? Is that what you mentioned there earlier?
Yes, potentially. Yeah, it depends on
Potentially.
how obviously, if you're still on the marital home mortgage, you'd need to be off that before you consider the first. But yeah,
Okay.
potentially you could be classed as a first home buyer, and the advantages that come with that is the first home scheme. Everybody should look up that. I'll be
Mhm.
talking about that in detail this evening. The help to buy scheme, and so on, schemes that are there for first time buyers, and the four times income rule as a first time buyer rather than a second time buyer. So look there, yeah, there is other definitions now for first time buyers.
Brilliant. Oh, look, I'm really looking forward to it. I'll be joining you. I'll be there as well with you, Sean. So tonight at 8 p.m., if you go to the link underneath the comments of this live, you will see the link to register. It's a Zoom, it's online, 8 p.m. So you won't be on screen, folks. So you can join in your pajamas with your cup of tea if you like, but we will be there and we won't be in our pajamas. Sure, we won't, Sean. Maybe.
No, unfortunately, no. I'll be dressed up for the event, and look, it's an hour max. It's
Yeah.
including Q&As as well. But if there's loads of questions, we'll stay as long as the
Yeah.
questions need to be answered. But it's the Q&As we do at these events are really useful, because although I try and cover everything off at one of these events, it's not always. Yeah, you take it for granted sometimes when you do it every day. So
Mm.
then that's where it's superb when people ask questions and then you say, "Crikey, yeah,
Yes. So bring your
here's
questions.
the answer to that,"
Yes.
and it doesn't matter what the questions are.
There are no stupid questions. There are no silly questions, folks. So definitely come along. Sean knows his stuff and he'll be able to help you and answer your questions. And also, I've just put Sean's email there at the bottom. If you did want to contact him, Sean at sbsmortgages.ie, if you wanted to have a chat and book a call. And there's the website as well. So, folks, so we might see it tonight. The link for the webinar is in the comments here. Sean, anything you want to add?
No, that's it. Look, I'm looking forward to doing it now this evening, because the 2026 has kicked off, and I do see always when a year starts, the first 3 to 4 months of our year are sort of bumper months for when people have got a real direction they want to follow in 2026, and that's when you see a lot of people wanting to get on the property ladder in 2026. Something I'll be covering tonight. I won't give it away today, but that's also when mortgage exceptions are available, and that gives you an uplift in your income. But I'll cover that off a little bit better later on this evening.
Excellent. Looking forward to it. Okay. Thanks, Sean. Thanks for your time.
Cool.
Thanks, everybody.